What's going on, everybody? My name is Zach Hartley and welcome back to my weekly watch list video. In this one, we're going to review the market conditions and some major economic events that are coming up really quick here. And then I'm going to dive into some of the stocks that are on my watch list this week. Let's jump right in. Okay, so first of all, we are at crucial levels with the NASDAQ, the S&P 500, and the Dow Jones. As you can see on the NASDAQ, we're on like our fourth test of this 12,250 level. We tested it at the beginning of February, and now we're on our third test in the last basically month to month and a half. Super crucial level. If we get rejected on Monday, Tuesday, Wednesday, we could fall all the way back down to 10,000, 10,200. If we break through, that's going to be a very bullish sign. Pretty much the same thing with the S&P 500. Beginning of February right here, we hit a high, we came down, and now we're back to that exact same level. And with the Dow Jones, you can see we've pretty much been hovering around this 34.7, 34.8 level for a little, 34.5 level for a little while now. So it's going to be really interesting to see what happens next week, because not only are we at a key point, but we've got some major events happening. Before we touch on that, let's just touch on Bitcoin real quick. We had a major pullback and a little bit of a rebound over the last few days. I don't think this is right. This might have been from last week, but we are up pretty big on the year. Bitcoin is still doing well, and we're trading above our 50-day moving average. So that is still good. Gold is also topping out right here. We broke above 2,000. We almost touched 2,050, which is where we got rejected in March of 2022. We're at this exact same key level. We also hit this back another year or two before this chart. So we've basically triple topped at 2,000. Again, a very crucial level. Now, when it comes to earnings, we had a lot of companies report last week. We got a lot of companies reporting this week, including SoFi, Uber, AMD, Apple, Shopify, AMC, lots of companies reporting. Thursday after the close is probably going to be the biggest day, but it's going to be very exciting. Now, this week, like I said, is big because we've got some major economic events. The U.S. Federal Reserve meeting where they decide on interest rates is happening on Tuesday and Wednesday. I believe we're going to get the announcement at 2 p.m. Eastern time on Wednesday. With regards to what they're doing with interest rates, either raising them or more than likely just keeping them level. I don't expect to see a decline in interest rates. And then Jerome Powell will come out and do a press conference at 2:30. So if you're interested in seeing what happens, make sure that you are well aware that that is happening on Wednesday afternoon. U.S. unemployment data comes out on Friday, and then CPI or inflation data comes out next week. And we're in the middle of earnings season. So we have a lot of stuff going on. We got earnings, we got interest rates, we got CPI, we got unemployment, we got a lot happening right now. Now, when it comes to interest rates, it's really interesting. In 2016, 2017, 2018, we were raising interest rates, and then COVID hit, and then we dropped them down to zero, and then we realized that inflation is going to be a big problem. So now we are hiking interest rates at a faster rate than we have seen in a very long time. We're not quite at the same rates we were at in 2007, 2008, and well, basically 2007 here, but we are very close. And so we have not seen these type of interest rates in the last basically 15 to almost 20 years, which is pretty crazy to think about. Now, on Wednesday, one of two things is going to happen. Number one, the Fed is going to decide not to hike their interest rates. They're either going to lock it in and just not touch it and not do anything. And that's probably going to be good for the companies that are susceptible to those higher rates. Things like real estate companies, construction companies, and consumer packaged goods companies. They don't want those rates to go higher because it means that consumers are going to have less money and that they're going to have to pay more in interest. However, if the Fed does hike the interest rates, it's probably going to be by 0.25%, and it's basically going to show that they are not done battling against inflation, and it means that there's probably going to be more pressure on certain banks and real estate companies that are the most susceptible to those interest rates. Now, we've already seen this play out in the last few weeks with Silicon Valley Bank and a couple of others. We're seeing it play out right now with First Republic Bank. Their stock has fallen from $147 down to below $3, and the question that you need to ask yourself is which bank is going to be next. I heard a really interesting analysis that came out, and it said back in the day the regional banks were super important because you needed to go into the bank. You needed to be able to access your money and talk to a teller and work things out face to face and in person, or at least over the phone. And so those regional locations were super important. But what has happened in the last 10 or 20 years is that most of the duties that required a regional bank and those face-to-face interactions can now be done on the line. And so a a lot of the smaller banks, their services have kind of been replaced, whereas the bigger banks, you still need them for corporate funding and for mortgages and for a lot of other services, but it's those smaller and middle-sized banks that are slowly being replaced with online banking, and it's those ones that are probably going to be the most susceptible to those risks. And so when I started to look into a couple of those banks, one that stuck out to me was Zion Bancorporation. It's a regional bank. They're doing not great. They're down by about over 50% right now, and I think that if interest rates go up and this stock continues to fall, especially if it falls below support here, I think there's going to be an opportunity to short it even more. Now, another real estate company that I'm watching that I think is going to have a pretty decent reaction to what is happening with interest rates is Zillow. You can see that Zillow is just hovering on support right now, and if interest rates go higher and Zillow falls below support here, there could be an opportunity to short it down to the next level. It's going to be interesting, and we're just going to have to be a little bit patient on this one. Now, a couple of companies that I like that I think are going to do well over the next little while. One is Albermarle. This company is very exciting. They're one of the largest providers of lithium for electric vehicles. They are one of the only producers in the United States that is currently producing lithium, and they're planning to grow pretty quickly. The stock is coming down to major support here, and they do have a small dividend that is not necessarily attractive, but it is a nice little feature. Another company that I like right now is Alphabet or Google. They are approaching some major resistance right here around $110, and if we can see a breakthrough of this $110, I think there's going to be a great opportunity with Google. It will basically be the proof of a change in trend here. The company just released their financials last week, and I personally thought they were pretty good. So overall, I am still a huge fan, and I like Google long term. I think they might be a little bit behind the 8 ball on this AI, but I think if any company can come back and kind of catch up quickly, it's probably going to be them. Last company here is DataDog. I've talked about this company several times on my channel. None of the kind of technical analysis has worked out so far because the stock just continues to trade along this support level right here around $61, $62. I am bringing this up again because I think it's something that should just be kind of kept on a watch list and on a radar until we see that bounce off the support. So that's what I'm doing here. I like the company, I like the financials, I like what they're doing. I'm just waiting for that basically confirmation and sign of a trend change. But I wanted to shed some light on it because I still like the company. Lastly, if you guys are interested in learning a little bit more about analysis and how to review these companies, definitely check out my stock market fundamentals course. It is completely free for 1 month on Skillshare. You get full access to the entire platform. Link is in the description down below. The stats on the course are absolutely amazing. Over 14,000 students, over 400 reviews, over 2 million minutes of watch time, and the videos are only 10 hours long. I promise you, it'll be the best way to spend a weekend, and it'll be the best free resource that you can find online. If you get any value out of this video, remember to click that like and subscribe button. And we just crossed 200,000 subscribers on TikTok. So if you want to check out some short, quick videos, a little bit more kind of like, not lifestyle videos, but like how I make money and what I do outside of YouTube, definitely check that out. I'll also link that in the description down below. Thank you guys so much for watching this video, and we'll see you in the next one.